The Bank of Canada is worried less about inflation risks and more about a slowing economy. The central bank announced today it's lowering its benchmark interest rate by a quarter point to 2.5%, breaking a streak of 3 consecutive holds since March. And we break down what this all actually means for Canadians. Bank of Canada Governor Tiff Macklem says cracks in the labour market and a sharp drop in exports are threatening growth, while earlier signs of underlying inflation pressure are fading.
There's still some mixed signals there, and I indicated, we know tariffs are disrupting trade. We know businesses are looking for new suppliers. They're looking for new markets. That is bringing new costs. So, we're going to be watching those costs carefully and how those get passed through.
His remarks come a day after Stats Canada said annual inflation rose a couple of ticks to 1.9% in August.
Canadians remain concerned about the cost of living, and our primary mandate is to maintain low, stable inflation, and we are very focused on that. I mean, total inflation is 1.9%. It's been running slightly below 2 since April, largely as a result of the elimination of the consumer carbon tax.
Premier Doug Ford chimed in on social media today about the interest rate dropping, writing, "Good, now keep going." That said, Ontario's financial watchdog is projecting that the Ford government won't balance the budget by 2027-28, though the finance minister's office insists it will. The Financial Accountability Officer says in a report today that Ontario likely won't come to balance until at least 2030. McMaster University economist Colin Mang says the Bank of Canada's decision to lower the interest rate for the first time since March is a good thing for Canadians.
This is going to be a good thing for Canadian families, particularly those who have mortgages coming up for renewal. This is going to lower mortgage rates. It's also going to lower the interest rate on variable rate lines of credit. So this is going to be a net positive for Canadian families.
And it won't just be homeowners seeing the benefit.
One of the big problems that we've had earlier this year is that investment has slowed down significantly because of our trade challenges with the United States. By cutting interest rates, the Bank of Canada is making it easier for businesses to borrow and to invest, and that should help to stimulate some economic activity here in Canada.
It's unclear, however, if we could see the interest rate fall even further this year.
Well, what the Bank of Canada said today is they don't want to be too forward-thinking because we don't know exactly what the tariff situation is going to be like over the coming year. What we do know is yesterday the United States government opened up consultations with their business community on renegotiating the free trade agreement.